You ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Friday, 11th day of June, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office or away from your desktop, not to worry, point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. You just want to have access to the chat box. We also stream live each day on our YouTube channel, which is youtube.com/CFRN. Easy to remember. Currently over 1,700 daily live broadcasts archived there for your viewing and educational pleasure. So with that, let's open with a word of prayer. Heavenly Father, we thank you for your blessings, for your mercy, for your grace. Today we ask that you simply help us find fulfillment in your presence. Help us to live in such a way that our actions serve as a reflection of your own grace and mercy. Teach us to seek first your kingdom and a life that brings glory to your name. And it's in Jesus' name we pray. Amen.
Amen.
Amen. Okie doke. Let me give you these numbers from around the world. The cash markets, the indices as they're called. Starting in the U.S., the Dow is down 61 points. NASDAQ is up 12. S&P500 down almost a point, basically unchanged. And the Russell 2000 up 9. Now those are the cash markets, the indices, so there's no contract month attached to those. In the live trading room this morning, Michael did roll forward to the new contract on the indices, and I'm sure he'll tell you about that when he takes the screens here in just a moment. In the commodity basket, crude oil up 60 cents, trading 70.89 last. That's a gain of almost 1%. Gold down $14.50, trading 18.81.90 last. Silver up 11 cents, trading 28.15 last. And the Asian markets at the close. Nikkei dropped 9, almost 10. Shanghai fell 21. The Hang Seng gained 103. And in the European markets at the close, the FTSE gained 45 points. The DAX gained 122. The CAC rose 54. Closest thing to a mover and a shaker there would be the CAC, gain of almost 1%. So that's going to give us a mixed day in Asia, a green day in the UK, and it is a mixed Radio Friday here in the US of A. We've still got those divided markets, the four major indices. We've got the Dow and the S&P in the red, NASDAQ and the Russell in the green. So we're just waiting for the day when we can say that they're all four back on the same side of the street, because that's when we have our best trading opportunities, more follow through, all the good stuff. So with that, we'll go to Michael and get a recap. Michael, if you're ready, you can take it away.
I am ready. Here we go. All right.
I can see it. It's all yours.
Excellent. All right. I'll jump right into it then. Good afternoon, everyone. Today is Friday, the 11th day of June, 2021. All right. If you've not taken a free trial with us, go to the homepage at cfrn.net. And right here, if you scroll down just a little bit, you get to the spot where it says free 5-day trial, no credit card required. Click on that, and you'll be brought to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest training challenge, so we can take one-on-one training just for you. And we really do that, even on Fridays. Hit the send button, you'll be sent a confirmation link. Actually, I do it on weekends too. And you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click the link, we don't know that you took the free trial, so you gotta make sure you do that. And really, enter this information in here so we can tailor the one-on-one training. Okay, now the spreadsheet today. Today was better than yesterday and the day before, but it was still a struggle. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today is the 11th day of June, 2021. Today we made 5 ticks in crude, 29 ticks in gold, and 5 ticks on the ES. Put us at plus forward 2.5 on the morning session. And today it took 51 minutes and 10 trades to get to the goal for the day. At that point, we're up 102 UX, and it took us, we took 19 trades in total on the morning session. Okay, so on the month now we're at $3,845 a contract. That's over 8 trading days, averaging $480 per contract. We've gotten our goal for the day on 110 out of 111 days. And that puts us at $76,375 per contract. That's over 111 days, averaging $688 per contract per 2-hour trading day. Now, by the end of the year, I want that to be over 700 again. But that said, we just got to do our work when we get in. I'm going to start out with the ES is where we had the fewest number of trades. So here on the ES, I mean, it was just totally garbage this morning. It was all of this right here. It's just not tradable. And, you know, I wouldn't recommend anybody trade anything like that. You know, if you're doing the YBR trades, there were a couple of them, but going to what we went over in the partners meeting last night about, you know, running to the nearest target being the prior swing high or low, you got to have room to run. And we really didn't have a lot of that in any of this today. So anyway, our first trading opportunity was over here. We took a short, we picked up 5 ticks. Our next one was right here. You see, after it had finally broken out of this stuff that it was in, we took a shot and we got 5 ticks, and then we took another one and we ended up with a break even on that. And then it just got into a whole lot of nothing. If you look down here in the slingshot, there's just nothing you can do. You know, there was a YBR trade right here, but again, right here is where you're expecting the first place for it to give you a little bit of pushback. And then the next one would be down here, okay? So if you're looking at the DOM on that, you know, the low of the day is right here, okay? And you can see a little while ago, I had drawn in this number down here for it to get down to. It's still trying to get down to that number even now. All right, well, that was the ES. So we ended up with +5 on the ES. On crude oil, the stop out right here kind of stung a little bit, but crude, we started out right here. The first trade on crude, we picked up. Was this the first trade on crude? This is crude. Yeah, we picked up 10 ticks on our first trade on crude. That doesn't look like 10 ticks right there. Yeah. Yeah, we picked up 10 ticks on our first trade on crude. It looks like this one here. I think I forgot to enter this. So we had a break even there. Then we picked up 10 ticks on this one. Whatever I got there, I didn't enter. So we picked up 10 ticks on this one, 3 ticks on that one to put us at +13. And then we stopped out to put us back down to +5. So whatever we picked up here, I forgot to enter in. And Then we stopped out over here to put us back to +5. All right, we missed this trade here, which would have been a break even, a very long, drawn out break even trade. Then right here at the end of the morning session, there was a trade right here that would have been a good, valid shorting opportunity right here. Okay, and there's a long right here that just triggered a few minutes ago. I drew this trend line while Dwayne was talking, or actually while the opening was happening. And that was it on crude. Now gold is where we had the most trades today, and it's also where we had our first stop out today. Now let's get in here, all the way back here. Okay, so this was our first trade of the morning right here. You can see it needed to go 4 ticks into profit, and it only went 3, so I hadn't moved my stop to break even, and then it came back, stopped me out, -8 ticks. Then it got really messy in here. Didn't really give any good trade setups. It did give one right here, if you want to take it off the BBC right here. I'm thinking I was probably looking at it, saying that it wasn't really trending very strongly, and it was whipping around too much. But it was a nice YBR trade for those of you guys doing the YBRs. If you can get a YBR trade where the cycle is the right cover and you still have all the separation, that's a good thing. Okay, so this would have been a bounce off the BBC and a YBR trade at the same time. Anyway, we were -8 up to here. We got 1 tick back here to put us at -7. Then we had a lot of short trades. 1 tick here, put us at -7. Then we had a break even. Then we had 4 ticks to put us at -3, then a break even. Then 1 tick to put us at -2. Then we missed a trade here that would have been a nice one to have. That was probably our biggest miss in the morning up until that point. Price did go down where I thought it was going to go, and gold was being pretty good about that, going to where I thought it was going to go. You know, where it was indicating that it was going to go. And then right here, we picked up 2 more ticks to put us back to break even on the morning. And then it got totally sideways here for about a half an hour. And then I went to fill up my cup at 10:30, and as usual, when I fill up my cup, the market comes back to life, and I came back, sat down, picked up 10 more ticks right there, put us at +10. Then, okay, I was looking at, we picked up 1 tick here to put us at +14, 1 more tick to put us at +12, then 11 ticks to put us at +23, and then 6 more ticks to put us at +29. And that was where we ended the morning session. It made this big move down here and didn't give us a trade setup. And I was looking at it here, and we were watching the low of the day in here. And I was putting all these numbers down here for it to go down to as it was doing it. But I didn't get into any of these trades. And I was doing it all the way down. You could see where it was going to go, but it didn't give me a trade setup all the way down. And then we get into the break. Okay, there was a beautiful long trade off the BBC right here. The MA1 blue and going up. The cycle blue. Nice separation. This right here is our highest probability trade. This one that happened right here, right at the beginning of the break, right there. Okay, that, if you take a picture of that right now and hang it on your wall or your computer, that right there is what you're looking for. And so it came back down here, gave a YBR trade here, but it didn't give a regular trade setup. This was all during the break, okay, and that was it during the break. Right here was a momentum short, didn't really go anywhere, would have been a break even, and that was it during the break. So we ended with +29 on gold this morning after starting out with a stop out. So let's go back here now. And all right, so if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today's the 11th day of June, 2021. Today we made 5 ticks in crude, 29 ticks in gold, and 5 ticks on the ES. Put us at +4 2.5 on the morning session. Today it took 51 minutes and 10 trades to get to the goal for the day. At that point, we're up $102.50. And we took a total of 19 trades this morning. So on the month now, we're up $3,845 a contract. Michael, oh yeah, you weren't in the partners meeting last night. I talked about it a lot in the partners meeting last night. You need to become a partner today. On the month now, I'll explain it to you in just a second here, Michael, okay? On the month now, we're up $3,845 a contract. That's over 8 trading days, averaging $480 per contract per 2-hour trading day. On the year, I've got my goal for the day on 110 out of 111 days, and that puts us at $76,375 per contract. Again, over 111 days, averaging $688 per contract per 2-hour trading day. Now, if you've not taken the free trial yet, go here to eminitrainingschool.com. All that we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent the confirmation link. You must click on the confirmation link, okay? If you don't click that link, we don't know that you took the free trial. So you got to click on that link. Now, Michael, let me answer your question. The question was, what is a YBR trade? Okay, let me show you that in, well, I'll show you in gold. Okay, here I did this chart over here so I could look at the 30-minute chart. I'm going to flip this to a 4-tick range. It doesn't, this one, I don't want to have any drawing objects on. So I'm just get rid of all the drawing objects that are on this. Hang on. Give me a sec. There it goes. All drawing objects gone. Now I'll flip it down here to a 4-tick range. And now I'll get rid of the things that you don't need for a YBR trade. Okay. Now I went over this in a lot of detail in the partners meeting last night. What you're looking for is the color on the YBR with a change, you know, like an up close. If you have blue, you want an up close. You want to have separation down here in the slingshot in the direction that you're going to trade, the direction you're looking to trade. Like right here, you have blue with an up close, you have bullish separation down here. So you would go long right here. Now, what I was saying in the meeting last night, when you get into a trade or you see a YBR trade setting up, look at the prior swing high because that's what you expect out of the trade. And then once it starts developing, this is more stuff that you're going to learn when you become a partner. You can look and see what else to expect out of the trade as the market changes, as the prices move around. You know, all these lines that I keep drawing that you said, you know, in our meeting the other day that I seem to pull out of nowhere. I would show you how to expect this out of it. You know, you start off with this, and then I'll show you how to expect this part. Now, if I were doing this, now if this were an actual trade that I did, and this actually was, it was a bounce off the BBC, I think. Now this was the ideal trade setup right here, is what I said. And as it was developing, if I were doing that in front of you, then I would have been looking for another opportunity right in here on this pullback for it to get up to the next level. And that opportunity would have been right here. Okay, so I would have gone long from here, probably taken some profit up here, somewhere on the way up there, probably. And then gone long again right there, had a little bit of a drawdown, and been looking up here to take more profit. And I did this in the meeting last night too. I'd have been looking for at least this much. Actually, I'm not going to start the leg length there. I'm going to start the leg length. I'll start it over here where it really started. Okay, that right there is the first leg length. So I'd have been expecting that out of it, and that out of it, and that out of it, and that out of it. See, and on this one right here where it failed to put that in, it started going the other way. Could have still taken some profit. Now down here, the slingshot would have stopped us from getting into this. You see right here where it turned down too steep, it would have stopped us from getting into this. So we wouldn't have taken this leg right here. And when it pulled back below this level right here, we would have stopped looking in that direction altogether. Okay, and started looking in the other direction. So right here, we would have shorted. Now this has got nothing to do with the YBR. The short right here doesn't have anything to do with the YBR, but you asked about the YBR trade, and here it is right there, up to there, then the continuation there, and a stop right there. Okay, now I went over that in the partners meeting last night. I probably just went over it more now, and Thomas isn't in here to watch this whole thing, but if he watches it on YouTube. Okay, anyway, that was a little bit more information than everybody was looking for, but there you have it. How frequent are those? Well, this is just the gold, and you can see there's one there. That was not a valid one. This was. You can see how that one worked. This was not. This kind of was. This was not. This was not. This was not. This kind of was. But again, you're looking to see the prior swing to see what to expect out of it. So I wouldn't have done this because there's really nothing to expect out of it. This one here was. This one here was. And let's see, this one right here was a good one. And that was all happening during the morning session. Okay, so you might have heard me say something during the morning session, like I'd say, okay, we don't have a trade setup that qualifies for the trades we're doing in here, but we do have a YBR trade setup here. I know I said that about probably 5 times this morning across the 3 markets. You know, like this one right here, we wouldn't have had a trade setup for the ES right here, but we had a YBR trade setup. Okay. And Shane's not in here either. We have people that do just that, you know. That's why they asked me to make an issue of it last night in the partners meeting, to go over it in detail in the partners meeting last night, which I did. And I just went over it in detail again for everybody that's here. So it's out there. Okay. Do you want to meet today, Michael? Because I have some time today if you want to meet. I'll just send you an email. Okay. All right. With that, I'm gonna wrap it up for here, and I'll send it back out to the studio in fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Okay, Dwayne, if you want to take it, it is all yours. All right.
There we go. Okay, recap of the recap.
Today it took 51 minutes and 10 trades to get to 102.5.
Good job.
Thank you.
Good job. Okay. All right. Let's start out with. Oh, and did you mention about rolling over today? I know.
Oh, no, I didn't mention that. Sorry, I meant to mention it last night. I meant to mention it last night in the partners meeting too. We rolled over the indexes today. The ES, the NQ, the YM, the Russell, and roll over the currencies too. The euro, you know, the yen, pound. So if you're not sure whether you should roll or not, with the euro, you got to look at the U contract. With the currencies, look at the U contract compared to the M contract, because I know the next contract with the currencies is going to be like
check out my screen, Michael. I've got a daily up of the S&P.
Mm-hmm.
Now on the U contract down here, we can see that so far in today's session, which started last night at 6 p.m. Eastern, we've got 885,000 U contracts.
Mm-hmm.
And on the previous contract, we've got 734. So the new contract has slightly exceeded the previous contract, and that's what Michael uses as his gauge across all the different markets to determine when to roll. And the indices always roll on the same day. Yesterday is what they call official rollover day. Some platforms will automatically roll you to the next contract. I don't know what Ninja does, but
yeah, they prompt you to automatically. I mean, they default you to automatically roll. You have to uncheck the default rolling, the default automatic re-rolling. Otherwise, it's just going to roll you to the next contract.
Gotcha.
And that's rolling your charts, not your positions. Your positions are a different thing. You got to do your positions on your own. You know, if you have something open, you know, a trade open, you got to roll that on your own. Okay. But your charts are automatically going to roll unless you do something to stop it.
Okay. Well, good to know.
And your DOMs will not. So you're gonna have to make sure you do those. Okay.
All right. Well, so everybody, you should be rolled. Now, the concierge trade alerts last night and the logic alerts, we were still in the M contract. And we were in the M contract all week, except for one alert that came out this morning on the NQ. So for the week 149 of Logic 247, that's our 24/7 around the clock Emini alert service. The channel opens for business Sunday night at 6 p.m. Eastern. It remains open until Friday afternoon at 5 p.m. Eastern, when the global markets close. There's a 1-hour break each day, Monday through Thursday. 5 p.m. Eastern signals the end of the current trading session, and then 1 hour later at 6 p.m. Eastern, that's when, just like last night at 6 p.m. Eastern, that began the Friday session. So for week 149 of Logic 247, total of 41 alerts, 6 never triggered, still waiting on that NQ, 34 actionable alerts, of which 21% stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our traders. An average week over the last 149 weeks, 20%. We've had weeks as low as 3, 4, 5%. We've had weeks, one week in particular sticks out in mind. The first day of the week, we were at like 35 or 40%. It was one of the toughest weeks ever, I think. But by the end of the week, we had worked our way back down to, I think, 19%. And so all of those numbers, every single alert we've ever done in Logic 247, and we are up to alert number 7,576. That's 7,576 live real-time trade alerts that have been issued over the last 149 weeks, and the average has been that 20% do stop out based on not risking more than $300 per contract per trade, but less when possible, by simply using market structure and that 3-step methodology. Now, last week, which was week 148, let me scroll up, here we go. Week 148, we had a total of 42 alerts, 7 never triggered, 2 carried over, 33 actionable, 18% stop out rate. Now, we've had weeks where we had as many as 100 alerts, and I think we've had weeks where we might have had as few as 25, 30. I know we hit a flat point back last year or into the previous year where the markets got so flat. There was 2 days there were no Logic 247 alerts. Not because we didn't want to put them out. We're always anxious to put out a high probability, low risk trade opportunity. But when no such opportunity presents itself, then we don't put out an alert. Because as traders are trying to learn how to trade, having these live real-time alerts to show you the windows of opportunity as they present themselves, so that you can then go in and practice everything that Michael has taught you in the live training room. He spends 2 hours, he and Valerie, 2 hours every day teaching you the methodology, the strategy, the underlying principles. When we move from the 4-tick range chart to the 30-minute chart, nothing changes. Everything under the hood is still the same. The only difference is the amount that is risked and the maximum potential profit in the trade. Most alerts have multiple targets. You've got your entry, you've got your initial target. The initial target's $100 per contract on all the markets except the NQ. The NQ is very volatile, and so the minimum target on the NQ is $200 per contract traded. The maximum or the potential profit in any given alert is determined by taking the entry and comparing it to the final target, not the initial target. Okay. When we're very close to a weekly trading zone, the final target will be the zone above or the zone below, depending on if it's a long or a short. In the instances where the market only offers 2 points or $100, then you can't risk more than $100. You never ever want to risk more than the potential profit in a trade. That's why when Telegram makes that sound on your phone, on your iPad, on your PC or your Mac, it's not a call to trade, it's a call to go look at the chart and see the trade opportunity that's going to develop right before your eyes. And then in your demo or simulator account, you're able to practice what Michael is teaching you as the opportunity unfolds. As you go through that process, our 24/20 blueprint is designed to help you go from 1 to 20 contracts over a period of 24 months. As you are earning the right to go live, and you do that by putting together 10 consecutive days in a row in the simulator where you reach your goal in 10 trades or less. Once you accomplish that, the blueprint gives you the green light to go live with 1 contract. And now you have a goal of increasing your account balance by $2,000. Once you do that, the blueprint gives you the green light to add a 2nd contract. The difference between the first contract and the 2nd contract is big. It's one of the biggest dynamics as you build your trading business, because that 2nd contract is being added with profit you earned in the market. The blueprint will tell you when it's time to add number 3, number 4, number 5, but you never add more than 1 at a time. You only add when it is time, and you only add with profit you earned in the market. Now, 2 points in the S&P, 1 contract, that's $100. Once you earn the right to go to 2 contracts, the same 2-point move is now worth $200. And once you earn the right to trade 5 contracts, the same 2-point move is worth $500. Once you earn the right to trade 10 contracts, the same 2-point move has a value of $1,000. It's important to remember you only add additional contracts with profit you earned in the market. If the blueprint signals you that you've spent enough time trading 2 contracts and it's time to add number 3, if you don't have the available profit in your account to underwrite adding that additional contract, then you simply don't add. In fact, that's a good time to book a one-on-one mentoring session so that you can get together with me, Michael, Valerie, Bert, any of us, all of us, because as a passport holder, you have unlimited access to one-on-one mentoring. Not only do you have access to the room every day for 2 hours, live training with a live instructor in real markets, but you have unlimited access to one-on-one mentoring and the Thursday night members only workshop. Okay? And Michael did spend a lot of time last night on the YBR trades in the workshop, so for those of you that missed that, okay, in the private Telegram channel, you'll find the weekly workshops, and that video's probably been posted by now, so if you missed it, you might want to check it out. Okay, so that's Logic 247. Now, just to give you an idea, the alerts look like this. Alert number 7,563 is to be short the Dow, S is sell, B is buy, 34,510. There's the initial target, the second target, the third target, and then the final trade to target. The final trade to target, if it's a long trade, it's going to be the weekly zone overhead. If it's a short trade, the final trade to target is going to be the weekly zone below. Price is always trying to get to a weekly trading zone. From the moment the markets open Sunday night at 6 p.m. Eastern till they close Friday afternoon at 5 p.m. Eastern, if price is above the BBC, that's the green line on the 30-minute chart, then that's the market telling you that it's trying to get to the zone overhead. If price is below the BBC on your 30-minute chart, price is trying to get to the zone below. And so once you begin to understand the methodology and the strategy, you can look at any chart for any market, and within 20 seconds you can identify what the market is attempting to do. 80% of the time, the market does the next high probability thing. 20% of the time, it doesn't. And that's why, with the Logic 247, over the last 149 weeks, we've averaged 20% of alerts being stopped out because the market does not do the next high probability thing. So as you're going through the process of learning the strategy, you're also determining who you want to be as a trader. Okay? Now, do you want to be the guy that just comes in, gets your 2 points for the day, and then you go do life? Or do you want to be the guy that stays in front of the computer all day long and attempts to milk as many points as possible out of the market? It's your trading business that you're building, and so you get to make that decision. While you're putting together your 10 consecutive days in a row to qualify to go live, you'll also be working on your business plan and your trading plan. Those are two very different documents, but they determine how you're going to operate your business. If you choose to be the 2 point a day guy, okay, then when you meet with Michael privately in a one-on-one mentoring, or with me or Valerie or Bert, then we're going to help you focus on doing exactly that, grabbing your 2 points a day and go. Your goal is to become very consistent at taking those 2 points a day out of the market. If you decide you just want to trade one contract or two contracts, you don't really want to increase your account size, and you want to go for the 3, the 5, the 10, the 20 point moves, okay, then our approach with you will be a little bit different. But it's during those 10 days where you're going to evaluate who it is you want to be. Now, the beautiful thing about futures is they trade around the clock. With equities, ETFs, you got to get your job done between the hours of 9:30 a.m. and 4 p.m. Eastern. For a futures trader, you've got 23 hours a day, starting Sunday night at 6 p.m. Eastern until Friday afternoon at 5 p.m. Eastern. So you never have to feel rushed or under the gun or pressured to, make something happen. You learn to wait for something to happen. And as that something is happening, you just step in and participate. So, this is the June contract that we have up on the daily chart right now. We have a new, based on the June contract, yesterday we got a new all-time historic intraday high, which was up at 42.49, which happened to be a weekly trading zone from last week, 42.48/49. Not only did we get a new intraday high, we got a new closing high. And the close yesterday was 42.38.5. Now I'm going to roll this forward. We're done looking at the the June contract. We're going to roll this forward, and everything from this point forward. Again, last night's alerts were based on the June contract, but we're rolling it forward. Kind of looks the same, right? Okay. Based on the new contract, the new all-time historic intraday high is 42.39.5. Let's go back to this for just a minute. $42.49 intraday high versus $42.39.5. A 10-point difference. Okay, So when you hear all-time historic highs quoted, sometimes it can be confusing, which is for the purpose of identifying all-time historic highs, you should use the cash index. It's like when Garrett comes on and shows his charts. He's rarely showing the actual futures contract. He's showing the cash market or the index itself. Now, you can't trade the index. What is the index? Well, we'll use the S&P 500 as an example. If you took a snapshot right now of all 500 companies that comprise the S&P 500, whatever price each and every one of them are at right this second, add them all up, divide by 500, and that will give you the price of the S&P 500 cash index. Again, you can't trade the actual index, so man created derivatives like futures and options and other things so that we can trade against the backdrop, which is the index itself. That's true for all indexes, the Dow, the Russell, the NQ. The Russell, there's 2,000 small cap companies versus the S&P, which has 500 large cap companies. So with the Russell 2000, you would add up the current price of all 2,000 stocks, divide by 2,000, and that will give you, of course you don't have to do that, you can just simply bring up a cash index chart. The DT Pro platform doesn't provide us with that option, but here's what I'll do. Let me open this, and we'll go here. Close some of these unnecessary windows. Okay, so let me find it here and I'll show it to you. I'm looking for the cash index. Oh, I think here we go. SPX. Okay. So now what you're going to look at, as soon as I get it loaded, there we go. So we'll close all of this. See, this is the S&P 500 index, SPX. Okay, this is what the futures are based off of, and we'll put it on a daily chart. Important that you understand the difference, because if you're driving in your car listening to the radio and the guy says, the S&P closed today at such a price, they're talking about this, the thing you can't trade, not the futures or the options, the thing you can trade. So the current price of the S&P 500 index, 42.34 versus what's the low of the candle? What's the low of the day? 42.21. All right, so we're on the U contract. We got a double top here. Yesterday, based on the U contract, 39.5. Today, 38.5. So we have failed to put in a new high by 1 point. Question is, where will we close today? We're sitting on top of support, blue and climbing, and the step line. If price trades below that support, then the next area for support would be at the low of yesterday at 41.97 1/4. Price flows exactly the same on a monthly chart as it does on a 1 minute chart, or a daily chart, or a weekly chart, or a 30-minute chart. From support to resistance, back to support, back to resistance, back to support, over and over again and again. It's a never-ending cycle. What our strategy, what our indicators help you see is where the market is, what it's trying to do, what's its mission. Market's always on a mission. Price is either trying to take out the previous swing high or the previous swing low based on whoever's in control. The buyers have the ball or the sellers have the ball. If sellers have the ball and we're below the BBC on the 30-minute, and price is trying to take out the previous swing low. If buyers have the ball and we're above the BBC on the 30-minute chart, well, then buyers are trying to take out that previous swing high. It's almost like a living, breathing thing. Kind of is. And it's on a mission. Our methodology, our strategy, which is very simple. There are not a lot of confusing indicators. You know, when you have a chart loaded with indicators, you got 5 things telling you to go long and 5 things telling you to go short, and 5 things telling you to stay out of the market. That's called analysis paralysis. And it's easy to fall into that trap. So make it a point not to. Okay? So, where do we close today? That's the big question. Because yesterday was a new all-time historic closing high. The last time we had a new all-time historic closing high was on May 7th. And you can see what happened the following day. If you go back in history, you'll find that when a substantially new all-time closing high is put in place, this is not uncommon. Okay? Because this new closing high came 1, 2, 3, 4, 5, 6 sessions, a full week after this new all-time historic high was put in place. So if we close the week today, it's an inside day so far because yesterday's high was 1 point higher, and you can see yesterday's low substantially lower. Another dynamic that's in play today, as I just showed you when I brought up the volume numbers. See, right now in the U contract, there's 918,000 contracts traded. If we go to the M contract, 759,000. So right now, volume is divided. I mean, we would have, almost 17, I mean, 1.7 million contracts traded if everybody was on the U contract. So as we wind down the June contract, by Tuesday of next week, everything will be in this contract. And this is what all alerts will be based on going forward. Okay? All right. Now, along with the CTAs, which are based on current price action and are published around the clock, sorry, I was reading a message. Where do the CTAs go? Come on. There they are. Okay. The logic alerts are based on current price action. However, the alerts have a buffer built into them. In other words, when you hear the alarm sound on your phone, your tablet, your PC, your Mac, you don't have to break your neck trying to get to your computer to place a trade. You will have anywhere from typically 20 minutes to 20 hours before that trade triggers. Probably closer to 20 minutes, but many times it is several hours. Okay, and the idea behind that is for you to get to your computer, see why there's an alert, see the window of opportunity, and then watch the trade develop. So you're getting a heads up, there's a window of opportunity, and then you're encouraged, of course, to trade in your SIM account until you've put together your 10 consecutive days in a row and actually qualify to go live. The concierge trade alerts are different. They're based on historic price action. And when you have something giving you alerts based on current price action and also historic price action, those two things work together very nicely, like a hand in a glove, and they help you spot those truly high probability, low risk trade opportunities. Now the concierge alerts are posted as a static report, like you see right in front of you, once per session, but the numbers are good for the entire session. Once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. There's two numbers on the CTA, and the best way to handle it is you just go to your chart, you draw a line in the sand at 42.51, draw a line in the sand at 42.29. Once this report is posted, any logic alerts that come out will support this. In other words, if price starts rallying up towards 42.51, our strategy will look for opportunities to buy the market, buy the dips. If price starts trending down to 42.29, well, then our strategy will look for opportunities to sell the market or short the rallies. We cover the S&P, the Dow, the Russell, crude oil, the NQ, gold, and silver. Now, Sunday night when the CTAs are posted, these will all be for the U contract. Okay. Crude stays the same. S&P, Dow, Russell, NQ. All right. So, this week has been one of the more difficult trading weeks that we've seen in a very long time because of this. Now, that's the U, so I'm going to put it back to the M because the alerts last night were based on the M contract. The vertical line represents yesterday, Thursday session versus Friday session. An all-time historic high was put in not this week's weekly trading zone, but last week's weekly trading zone at 42.48/49. Now the CTA will do one of two things. It will act like an iron curtain and turn price back in the other direction, or it will swing wide the gate and allow price to proceed higher or lower depending upon which one has triggered. Even though, due to those economic reports we had yesterday morning and the nice leg we had to the upside and then the pullback to the BBC, you see how the pullback held? The pullback holds more often than it doesn't. So from support, we know that price is now going to go and look for resistance. Where's the logical spot for the market to find resistance? At the weekly zone, and if it gets through the weekly zone like it did here, then the previous swing high. You see, price did exactly what I said. It tried to go up and break the previous swing high and failed. So when price fails and gets below the BBC, well, now we're looking for opportunities to be short the market. Okay. We've got a short trigger down at 42.29 based on the June contract, and the long side was 42.51, neither of which has triggered. Even though we had what looked like semi-normal markets yesterday, we're back to this just sideways stuff. And that's what we've been dealing with all week. For any number of reasons. One, we're at near all-time historic highs. The market often does this because buyers and sellers, nobody has much commitment. Everybody's kind of just waiting to see what's going to happen. And so we ground sideways for 1, 2, 3, 4 days. weekly day 4. And then we finally broke out to the upside slightly, put in that new all-time high, and now we're grinding sideways the same way we were grinding here. Hopefully, as we get into next week and everybody gets on the new contract, we'll start to see some nice fluid flowing markets like we've been accustomed to for the last few years. Okay, this is all very, very unusual. If you're new to futures, if you're new to trading, if you're new to CFRN, this is not typical market behavior, not by a long shot. I mean, just look at the zones. We've stayed within the 4212/13 zone and the 424849 zone, the next one overhead. We stayed inside that zone, with the exception of that, and the exception of that, the entire week. Now, whether you're on the trial or if you become a partner, you have access to every one of the 7,000, whatever it was I said, logic alerts that have been issued over the last 149 weeks. So you can go back and you can pull up historic charts and you can see what kind of volatility we've had over the last 149 weeks. And I assure you, it's nothing like this. Seeing price stuck in just one zone for the entire week, almost unheard of. Now, if you're someone who just simply trades zone to zone, well, you didn't have a whole lot going on. The one zone to zone move, 4212 up to 4242, or was it 44? Yeah. I mean, that's something, right? So we're just being patient. We just have to get through this. And it's times like this when traders who've been doing well, they've seen their account size grow over days, weeks, months, because there's been lots of nice flow in the market, lots of nice follow through. The market doing the next high probability thing almost effortlessly, it seems. We get into a week like this, and all that hard work, the days, the weeks, the months, can evaporate, it seems like almost overnight. So it's so important that you be aware when we're in this type of market. When the 30-minute chart, when your two main indicators, the CFMA1 and the BBC, don't ever really pull away from each other to any degree, I mean, that's nothing. We spent most of the week in a 20 to 30 point range. Go back a few weeks, look at the historic charts, you'll see day after day after day where we had 30-minute candles that had a 20-point range. So our weekly range almost got reduced to a daily range. Will it change? Will it go back? I assume it will. There's so much going on in the world today, from politics to pandemics to you name it. Lots of reasons for volatility in the market. But again, traders are cautious at this point, because the verdict's not in. Is the bull tired? Is the bull ready for a deeper pullback? Now, from the new all-time historic intraday high, 24% fib retracement, sits down here at basically 4,000. That would only be a 200-point drop, which would be 2,000 points in the down. Most likely, we have something a little more severe on the way. But there's uncertainty in the marketplace. So, do we still get another leg to the upside? Or do we need a nice healthy 50% retracement? Maybe back down here, 37.25. as a futures trader, we are not particular if the market's moving with purpose and passion to the upside or the downside, as long as it's moving with purpose and passion. Okay? And that's not what we're looking for. So we just have to be patient. You can either not trade, or you can reduce your trade size if you feel compelled to trade. Okay? It's kind of that simple. So S&P never triggered on the long side or the short side. The Dow did trigger. We ran right up to the CTA. Now, the CTA can also be looked at as like a daily trading zone, okay? Because those are issued daily. Weekly trading zones are carved in stone for the entire week. So what did price do? It ran right up to the trigger and got turned away. You see that a lot. On the lower side, we got through the CTA. We spiked the weekly trading zone, but look at what we're doing. We're consolidating at that weekly trading zone, 34,360/65. Did we anticipate that? Yes. When price moves up to a weekly zone, we expect it to be good resistance until proven otherwise. Consolidation will happen 70 to 75% of the time. Only three things happen at a weekly zone: consolidation, rejection, and a slice. So we get a little pullback here to blue and climbing, and then we consolidate for another hour and a half. Okay, this was the opening candle on Wall Street. So when the bell rang, price ran up to the CTA, quickly reversed, and closed below the BBC, all in 30 minutes. Okay, which set a bearish tone for the session for the Dow. Once we get this close below the BBC, and this next candle takes out that low, we're looking for opportunities to sell the market, sell the rallies. Okay, if we continue to consolidate here at the zone, the best thing that could possibly happen right now would be for buyers to come in and drive us up to the BBC, which we expect to be good resistance until proven otherwise. And then it gives us a leg back down. All of those 7,000, whatever number of trades it was that are in the channel right now, all of those are trend trades as defined by a 30-minute chart and the BBC. If price is above the BBC, then alerts will only be to the long side. Once price gets below the BBC on the 30-minute chart, then you'll only see opportunities to short in the Logic 247 channel. Everything that Michael teaches you in the morning in the live training room, everything is fluid across all markets and all time frames. S&P, Dow, crude, gold, euro, doesn't matter. Time frame, 1 minute, daily, monthly, weekly, doesn't matter. Everything we teach is fluid across all markets, all time frames. So if you fancy yourself a 5-minute crude trader, that's fine. Learn the methodology, learn the strategy, learn the underlying principles, and then simply go and apply that to your 5-minute crude chart. If you fancy yourself an S&P 4-hour trader, you use 4-hour candles, that's fine. Just learn the methodology, learn the strategy, and then go apply what you've learned to the chart you have in front of you. Okay, so we triggered at 385. The target was the zone, which is 60.65. So just a 20-point move, $5 a point, $100 per contract traded. Unless you've earned the right to trade 2 contracts, then it's $200. If you've earned the right to trade 5 contracts, it's $500, and so on and so on. Next is the Russell. Okay, Russell bucking the trend. We got the Russell and the NQ trying to go higher, but the S&P and the Dow trying to go lower. Okay, so what's price trying to do? Well, we're above the BBC, so we know price is trying to move higher. What's it trying to do? It's trying to take out this swing high. If it can take out that swing high, what's its next objective? To take out that swing high. If it accomplishes that objective, what's its next objective? That swing high. And then this bearish cross right here, that's major resistance, major potential resistance. And then of course you've got the weekly trading zone, and look what happened when price made it up to that weekly zone. 2349/2350. We consolidated for 1, 2, 3, 2.5 hours. And then when price finds resistance, when it can't go any higher because there's not enough buyers in the order flow to support it, what's it going to do? It's going to go look for support. And it found it. Support sent it to resistance. Resistance sent it to support. Support sent it to resistance. Back to support. Back to resistance. Back to support. Back to resistance. Back to support. And then right here, what happened? Price got back above the BBC. Gave us a nice leg. A retracement to the BBC. The pullback holds more often than it doesn't. Okay? It held there, it held there. It ultimately held here. We had a little head fake to the upside. It held there, and then held right there, which led us to this move. So if we can trade through this potential resistance right here, then the next window of opportunity is up here. $23.33 up to basically 37. Okay, so if you choose to be that 2-point a day trader, the Russell pays $50 a point, like the S&P. This window of opportunity from 33 to 37, that's 4 points. So we'll teach you how to use exactly what Michael teaches you in the live training room every day, so that when price enters this window of opportunity, you can apply all the things that you've learned to trade in the direction of the highest probability. I mean, if price takes out this resistance, now we have to anticipate that it is going to be resistance until proven otherwise. How will we know? Because price will close above it. Okay, so once we enter the window of opportunity, that three-step process comes into play. Excuse me. And that's where you go to work. What you don't want to do is, if price proves itself by taking out this resistance and moves into this area, you don't want to be shorting the market on this pullback here. Okay, as price proves itself, you don't want to be short the market, you want to be long. We're printing a green 30-minute candle. No reason to go short here until this chart tells us we can't go any higher. This swing high right here at 23.38. Why was that the swing high? Simplest answer is because nobody was willing to pay 23.38.1. Now think about that. The swing high here, 23.38. If somebody had fat fingered a trade and bought at 23.38.1, that would be the high. It's really that simple. When buyers stop buying, this happens. It takes financial commitment for prices to rise. But for markets to fall, see, buyers for 2 hours here, they were buying and buying and buying, and finally they said, you know what? We can't seem to break through this wall of resistance. So they just back off. Stop buying. Sellers come out of the woodwork, and we get a leg and a retracement. And a leg and a retracement. And a leg and a retracement. Once that retracement happens, price gets back below red and falling. Trading's not easy, but it can be this simple. Get shorted. Pick a number, 23.26. Takes you down to a swing low of 23.20. Okay, 19.9. So we did trigger the CTA on the long side with the Russell. From 22, we made it up to 30. So 8 points. Important prices, important areas are almost always tested. So this is not unusual. This happens daily. Price gets back below the trigger, fires again. Market loves to repeat itself. The market loves trading where it's already been. It's comfortable with that. So our big question here is this resistance at 23.30.5, is that going to hold? If buyers are committed and they keep buying, then price will keep rising until we reach the point where buyers are no longer comfortable buying. And the second buyers stop buying, this happens. To whatever degree. Okay? Alright. So here's the NQ. Last night's alert was on the M contract, of course. Beginning Sunday, they'll all be on the U. What do? We walked right up to the CTA. Stopped it dead in its tracks. And just consolidating sideways since. Now, we're below the BBC, we're printing a red candle. We know that buyers came in at 13.93 1/4. They made a stand, drove price up, but they weren't very successful. They ran into red and falling. And so if price takes out this support area, then we have a very nice window of opportunity. Want to get below the low of that candle? And so basically about there, from 8.93 down to 70. That's 20 points at $20 a point. $400 per contract traded. And that's even in this quiet, sideways, consolidated market where volume is split between the M and the U contracts. As this drops, we expect this to be support until proven otherwise. Once proven otherwise, man, we're ready to, any little pullback, we're ready to short it, short it, until the market finds support, like on this pullback here. Bullish cross, price ran up almost to the zone, and then it pulled back to the zone, spiked down, found support at the BBC, and so once this green candle began to print, you simply use that three-step process, market structure, go find your entry, and trade right up to the zone. Remember, when price rallies up to a zone, we expect it to be good resistance until proven otherwise. And just like this, when price drops to a zone, even if it spikes it, we expect that zone to be good support until proven otherwise. Alright, crude oil. Up and away with crude. Okay, the opening candle last night was right here. Yep. So we never triggered on the short side. We did trigger the long side multiple times. Important prices, important areas, almost always tested. We triggered 70.30. We made it up to the weekly trading zone at 70.50, which we expect to be good resistance. And it was. And we were able to spike a little bit higher. Took us up to 70.80. Then what did price do when it found resistance? When it couldn't go any higher. Why couldn't it go any higher? Because nobody was willing to pay 70.81. That swing high, 70.80. Because at that moment in time, no trader, institution or retail, was willing to pay 70.81. So that was the high. Price pulls back to the BBC, which we expect to be good support until proven otherwise, and it was. We dipped below the BBC. Now, you see that bullish cross? When a bullish cross or a bearish cross leads to an extended move, when price returns to that area where the cross took place, in this case, bullish cross, we expect that to be good support. And look what happened. Back up through the trigger at 70.30, all the way up to 71. Well, at 71.20, that's a $900 per contract move. A $1 move in crude from 70.30 to 71.30. One contract, $1,000. When gold moves $1, that's $100. When silver moves $1, well, that's $5,000. Okay, all right. On gold, we just barely triggered on the long side. The CTA was 1904. We hit 1906. That's a $220 per contract move. That's what the market made available. And then we triggered on the short side at 1890. Made it down to the zone at 1882. That's an 8-point move, $800 per contract trade. And on silver, we triggered and we triggered and we triggered and we triggered. And where did the market find resistance each time? At the weekly trading zone. Again and again and again and again and again. It's not magic. It's just math. Man does not know what's going to happen next. Traders don't know what's going to happen next. The algorithm doesn't know what's going to happen next. God did not give man the ability, man or his machines, because the machines are a product of man, can't predict the future. Now, you can flip a coin and be right half the time. Most websites that you visit with trading and emails you get try to convince you that they actually do know what's going to happen next. But see, that defies the laws of science, physics, and even God. Because God just didn't give man that ability. What you can know with certainty is what the next high probability move is. Once you understand how price flows. And how does it flow? From support to resistance, back to support, back to resistance, over and over, again and again. What's the next high probability move from here? Well, we're below the BBC, so we can only think short. We're printing a red candle. Okay, the low of this candle is potential support. If price drops below the low of that candle, and there's a window of opportunity. 28.10 down to 28.04. That's a 6-penny move. 2 pennies is $100, so it's a potential $300 per contract move. And what if price keeps falling and takes out that swing low? Well, we expect to find support at the weekly zone. And just above the weekly zone, there's a bullish cross. So we expect potential support even before we hit the zone. But first, price has to overcome the support established here and the support established here. And then that leads to a much bigger window of opportunity. And there you have it. So if you want to learn how to read a chart, if you want to learn how to trade, if you want to learn our methodology, our strategy, the underlying principles, if you want to become a part of our family, lifetime membership, that's the passport. It's the all-access pass to everything we do, everything we've ever done, and anything we do in the future. We have thousands upon thousands upon thousands of videos, training videos. But we have something even better. You'll have, as a passport holder, you'll have access to all that historical stuff. But then most people give you that. You know, it's easy to be a genius with a historic chart, right? What you have that's better is you have 2 hours a day with a live instructor who you can ask questions and get an answer. As the market is moving, as trades are being put on and taken off, you get to ask questions and get answers so that you learn. And then when the alarm sounds, you go and you study the chart and see the window of opportunity, and then you apply all the things that you've learned until you earn the right to go live. And you start with the 1 contract. And then you earn the right to trade 2, and then 3. That's your opportunity to become the 1 out of 10 versus the 9 out of 10. You will end up in one of these 2 categories. Okay? It's just a fact. That's the truth about trading. To get your passport today, go to eminifuturestrading.com. If you have any questions, call Valerie at 949-42-EMINI or send her an email, support@cfrn.net. Time now for our good word for the day. Yesterday we talked about giving God the first few moments of the day before the hustle and bustle of life hits you in the face. Spend a little quiet time. Today we'll talk about approval addiction. Proverbs 29:25. Fear of man will prove to be a snare. In life, you can be addicted to a lot of different things. Alcohol, drugs, sex, gambling, food. But did you know you can also be addicted to approval? When Moses chose 70 leaders to help govern Israel, he told them in Deuteronomy 1:7, do not show partiality in judging. Hear both small and great alike. Do not be afraid of anyone. Now, that's some advice Peter should have taken. In Galatians 2:12 we read, before certain men came from James, he used to eat with the Gentiles. But when they arrived, he began to draw back and separate himself from the Gentiles, because he was afraid of those who belonged to the circumcision group. When your identity is wrapped up in other people's acceptance, you set yourself up for approval addiction, because your self-worth is always on the line. A notable French author said, we're so accustomed to wearing a disguise before others, eventually we're unable to recognize ourselves. And that's not how God wants you to live. No one's approval or disapproval can affect you unless you give it credibility. Jesus spoke without feeling the need to create an impression. Therefore, he was free to speak the truth in love. Someone wisely pointed out that when we are young, we worry about what people think and try to please them. When we're middle-aged, we get tired of trying to please everybody. And as we get older and wiser, we realize most of the time they weren't even thinking about us at all. Guess what? There are times when pleasing God means you won't be able to please people. And you got to accept that, because one is far more important than the other. And that's our good word for the day. Hope you have a great weekend. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.